I've tried to explain to people, this space is long-term. You tell them, hey, listen, because of the tightening of financial conditions last year, the market's going to start weak. If they don't like crypto or don't know about it, it's daunting, so they don't ask. When it happens, it's like, what's happening? I'm like, I told you, the market should be weak because of the financial conditions. Another week later, what's going on? What they're doing is building narratives to describe why the price action is. So it's like, suddenly they go from, we're all going to be rich, to Trump's ruined everything, tariffs are going to destroy the world's going to go into recession, this is the worst thing ever. Maybe it's not that. Maybe it's as simple as the flow of liquidity into markets, and over time, crypto gets adoption.
After weeks of the biggest crypto sell-offs in recent memory, we're now starting to see an exponential rise in Bitcoin and crypto prices. Raoul gives an urgent update for all investors selling their crypto and what we can expect in the days and weeks ahead. Today, as we step into a world of financial intrigue and dynamic market forces, we'll hear the latest predictions from Real Vision CEO Raoul. With the keen eye of a seasoned investor, Pal casts a spotlight on Bitcoin and the expansive cryptocurrency market, recognizing its significance against a backdrop of economic uncertainty. Pal discusses not only the economic indicators, but the absolutely parabolic surge in crypto prices we're about to see. Bitcoin is one that is headed for an unprecedented price milestone, and Raoul foresees a financial tidal wave that will catapult cryptocurrency to new highs. Raoul says the crypto world is on the brink of something massive, a seismic shift for Bitcoin and crypto in what he calls the banana zone. As the momentum is building and the institutions are quietly positioning themselves, Raoul says everything is about to change. Drop your comments down below and subscribe if you enjoy the content we do here.
All of our life savings are in this, right? It matters massively. And I get that. So I'm not flippant about that. What I'm trying to do is get people to relax and understand there are ways to do this.
Anyone else coming into crypto, first you say Bitcoin, right? And I'm like, everyone, without exception, will say, yeah, but Bitcoin is 90K or 100K. If it goes to 200K, I'm only up to 2x. I want to make money, right?
No, not yet. Not yet. Because at first, they're coming out of 401k world or investing world, or they've got a bank account and they're getting 5% interest on their deposits, right? The Uber driver. And he's thinking, well, how do I make money? I've owned some, he might have bought a share or two or owns, an ETF. So when you say, well, Bitcoin on average does like 150% returns over since 2012, but then once you start seeing the rest of crypto, you're like 100%, but that bloke just made 100x. Okay, this is the danger zone now. This is when they start, you talk to them, they're like, I'm all in on coin. You're like, no. And I try and explain to them is you have to go down that learning journey, do that with 10% of your portfolio, because then you can f it up. I'm still holding on to my smoking chicken fish, which was down 90% and is rallying well. I've kept with that meme because, look, I don't have an edge in memes. And as you know, all you end up doing is switching from one narrative to the other at narrative peak, because people are really in the trenches, can see this, and there's a different set of signals they look for. So I don't. So I have, that's the one meme I've got still. Oh, and I own Doge.
Do you still have faith?
Do I still have faith in the chicken fish? Yes. Lord Vishnu will save us, will rise from the ashes. But I don't know and I don't care is the point. It's fun. It's fun to do, and whether whiff's your fun or bonk, it doesn't matter. Just don't let it be a large part of your portfolio, because the probability is something like 85% that it'll go to zero. That's not the only risk. This space is so full of risks. You have to be paranoid at all moments. Because before you know it, you're like, well, I'm buying and holding, so I want to get some yield.
Next one I want you to ask, yeah.
And then you're on some DeFi protocol that's giving you yield, and something goes wrong, goes to zero immediately. Okay, that is a classic one that happens endlessly. Or you expose your wallet and get hacked. And people don't understand wallet hygiene and how to keep things in different wallets and never expose your key wallets to things, always have a step in the middle, the custody side of stuff. There's so many ways you can get hacked. There's people impersonating me online or you online, trying to get your wallet, or impersonating Coinbase online. Everybody's after your money. And you have to be paranoid at all points. Upside will take care of itself.
Yeah.
So you don't need to worry about, will the market go up over time? As long as the central banks keep printing money and this technology gets adopted, you'll be fine as long as you're adhering to not being too far out the risk curve. And then you need to be paranoid about every single other part. Because don't forget, in the end, we go back to the point I made earlier, everybody's life savings is in this. This is the single most important thing for most people in their financial lives. And there are so many ways you f it up by getting a little bit greedy. Does the 6% yield actually matter to you? Oh, but it gives me cash flow. But if I'm 6%, you get 6% and there's a percentage chance of losing all of your money, and you don't know what that percentage chance are. Now, that's not the case with all DeFi or anything else, but it's just that people end up doing dumb shit.
These Bitcoin ETFs with TradFi is going to become a big thing because Bitcoin ETF will want to have yield on their Bitcoin. Would they want yield on their Bitcoin?
They've dealt with no yield on gold, but they've never owned a lot of gold because there's no yield. So they do prefer it. And, that's why I think when the ETH ETF has yield, which will come, it'll be more attractive to them. How do you get the Bitcoin ETF? Well, it'll be the same as the safest yield will be this kind of borrowing fees for borrowing it. And if it's run by large institutions, you've got some backstop protection. All ETFs have some sort of yield from borrowing that's often taken by the asset manager. I just don't like it because the capital gains is so big. We're not trying to eke out an extra few percent here.
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now, a period characterized by parabolic moves upwards in crypto prices.
But what you've got is a yield curve mismatch. So you're able to have short-term access to yield, but really they have to lock it up. So managing that liquidity, and they're smart people, is complicated, and we don't know what can go wrong and when it goes wrong because we've never stress tested it. And that could be a weak point. We've talked about weak points many times. It's like Deribit, who I love, is a weak point because it was 80% of all the option market, or 90%. Now, it looks like they might get bought by Coinbase, which is much better for the market, but we need more options platforms. They need more competition to spread risk. It's the yield enhancement stuff I don't like. And without naming names, but I just don't like them. And they're all smart people and they're good people and they're all trying their best. But I think those products should be in the hands of professionals and not retail. I really do. To put their capital, because they understand the risks, where are the counterparty risks, all of that stuff. And if they want to get the extra yield from doing that, great. Your Brevin Howard hedge fund and you've got cash and you want to reinvest that, or you've got crypto holdings, that's your job. But for the average person to see 20% yield and that this is amazing, I'm going to be rich, you don't know what risk you're taking. What I do know is by him doing what he's doing, he's creating leverage in the system. So he's basically, via the convert, selling cheap options. They're being bought by option arbitrageurs, and who are then laying off the option risk on exchange, whether it's against Bitcoin or whether it's against MicroStrategy's listed options themselves. But also, they're trading the NAV versus Bitcoin, which moves around, and that's feeding also within it the perps versus spot, the futures versus spot, all of the arbitrage in the system. And arbitrage uses a lot of leverage because you're making smaller returns and they use leverage to enhance the returns. It seems right now that most of the buyers of the converts are TradFi hedge funds and others. So there's people like Norges Bank, who are a sovereign wealth. They buy it for just the Bitcoin element of it. But then there's a bunch of Citadel and Millennium and Point72 and all these giant hedge funds, and they're doing the arbitrage. These guys understand risk very well, and they're probably systemically backstopped as well. And their position's not big enough to blow them up. It's who else is going to take the risk further out the curve that blows up. This market always blows up from leverage every time. There's no such thing as free money.
No, for sure.
And when people start calling it like the free money machine or whatever it is, it's like, no. And the other thing is, there's a lot of ETFs that are attached to MicroStrategy's, the 2x longs, that creates this convexity, but it also on the way down, MicroStrategy falls more. And then it starts trading at a discount to NAV. And then that blows up the arbitrage people. There's easy ways to see as this thing builds and builds and builds, how it can create systemic risk in the system, in the crypto system, and maybe in the finance system. I'm massively overweight SUI.
Oversold.
Massively.
Can I ask you, percentages wise, more or less?
I'm definitely over 70% SUI. And that's not anything to do with the foundation that I'm on. That's my just capital allocation of my savings. And simple. It's not because I'm on the foundation and people are like, hey, he's just shilling his coin. It's because the fucking chart of Solana, SUI versus Solana broke out. And Solana was the strongest horse in the race. So if another large token is outperforming Solana on like weekly charts, daily charts, significant time horizons, and the chart pattern looks good, and you can see the adoption, and it's got a lower free float, and there's large demand, and there's a lot of developer activity, and all of the things we talked about, then I'm forced to do that. I then also looked at anything versus SUI now, because that's now your benchmark.
Yeah.
And then what's funny is you see, well, there's one token that's doing really well versus it. Deepbook. And Deepbook is the liquidity layer SUI, so and some of that too. It's really interesting because when you talk to, here in the Middle East right now, you talk to people, they know SUI because it's Facebook. You speak to people and everybody says, yeah, they're really interesting.
Raoul Pal's banana zone, the explosive phase in crypto bull markets, hasn't been cancelled, despite recent Bitcoin corrections. Critics question Pal's thesis due to recent volatility, but he emphasizes the banana zone unfolds in phases. Rapid gains followed by healthy pullbacks, much like in past cycles. Powell stresses this pattern is normal and necessary to flush out weak hands and reset leverage. He highlights Bitcoin's high correlation to global liquidity, which remains supportive, even during temporary liquidity air pockets. He believes the market is setting up for another strong leg higher. Similarly, Bitwise CIO Matt Haugen supports this view, pointing to a dip-then-rip pattern, where sharp pullbacks are typically followed by massive rallies, up to 190% gains historically. Both argue that patience, not panic, is key. The banana zone is alive, just misunderstood. As the momentum in the crypto market is building and institutions are positioning themselves, Raoul Pal says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months. He says we're about to see massive capital pouring into the crypto space. With major pension funds and institutional investors on board for the coming cycle, Raoul Pal predicts that crypto is on track to be a $10 trillion digital asset class. Pal says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before. Bitcoin is one that is headed for an unprecedented price milestone, and Raoul foresees a financial tidal wave that will catapult cryptocurrency to new highs. Raoul Pal says the crypto world is on the brink of something massive, a seismic shift for Bitcoin and crypto in what he calls the banana zone. As the momentum is building and the institutions are quietly positioning themselves, Raoul says everything is about to change. He recently shared his take on the current economic uncertainty, with tariffs and recession fears creating market volatility, that a major market rally is on the horizon. And that's where Bitcoin comes in. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. So we could see a sharp recovery in the next week. The bottom line, Bitcoin's next big move depends on how this plays out. What do you think about Raoul Pal's latest interview? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this.